The first rates in the red, 190 points lower is what the pre-open rates were as it is indicating. But we're managing to cling on to that 11,100 level, and a downtick of 0.6% is what you've seen as far the first rates. Reliance still marginally higher, 2065, and I think if Reliance were to fall, that would impact the index. The fact that we're still clinging on to 11,100, Reliance has a big contribution there. Axis starts off about 2% lower. Baja Finance in the red. It's financials which are taking a bit of a beating right now. ICICI Bank as well on your screens. SBI too, after a big move in the stock price yesterday, that eases out. Then I want to see what an Eicher Motors, the Divis, SBI, etc. are up to, because remember, these were the big movers from yesterday. Look at Reliance. The market can do whatever it wants, but a completely reverse trend on Reliance Industries. 2075 now on Reliance, as I see on my screens right now. The Nifty Bank, it's underperforming the benchmark index. It's down about 1.5%. 350 points lower for the Nifty Bank as we speak. So clearly financials are the ones which are under pressure. I just want to quickly see what IT is up to. Remember, it's the big IT names which led to the fall on the US markets overnight. Not correlated, but let's see as a trend what's the move on the Indian IT names this morning. Infosys, HCL Technologies, TCS, these are stocks which will just come up for you on your screens. And I really have to say that at 0.6% lower, the fact that we're still hovering around 11,150, this is not a bad start at all. And even if we were to consolidate a little bit here, that would be okay. Besides Reliance, the Cipla, Cadila, Lupin, Sun Pharma, these are your gainers today. The breadth, of course, is lower. And within the F&O universe, you've only got 120 or 19 stocks actually standing to the advances and a good 116 to the declines right now. L&T Finance, BHEL, Axis, HDFC, SBI, these are your big laggards today. But now you're seeing a bit of a further ease off for the market, but still, CK, I would say 11,100 staying put. And I think it's Reliance single-handedly which is providing that cushion and ensuring that the Nifty stays put.
Well, that certainly seems to be the case, and Reliance, like you rightly said, seems to be completely unmindful of where the market opens or closes, because it seems to have laid down a track of its own and the train is running on that. The only thing to do is either board the train or stand back and enjoy the way that it whisks past you. That aside, I think the breadth is a bit mixed today at the open, and the sellers seem to be, the negative seems to be a little more as compared to the gainers, and which seem to be rather limited and quite limited to a few gainers, and Sun Pharma being at the top of that list is working its way towards that 500, 505 region, where I think big resistance is there, but then a pretty decent upside gap and holding as we speak. So that is something good, indicating that there were no overnight positions to take profits, and probably there were overnight shorts. So Sun Pharma could remain in play. I think the other pharma stock which is looking pretty spiffy in the morning is Cadila and perhaps Cipla too. So there is an element of pharma gains within the ones which have moved up. So today could be a day for some pharma stocks. Divis, which was in great form yesterday, I think that is the one to take a look at. Among the IT stocks, which are also typically the go-to stocks when the markets are not in too strong a mood, seems to be Mindtree. I think Mindtree is something which can improve from here. So a few stocks to actually look to buy into. Do we have anything to sell? I don't think that should be possible. I think State Bank of India tried to make a go of it yesterday, failed yet again. So maybe some long liquidations will have in State Bank, and that could see some decline. And this may keep the lid on the financials for a while, because Axis and ICICI, etc. also I see on the downside. So financial not performing is not going to help the case of the Nifty either.
Okay, that's the word on the market. It is a weak start, but I would say it's not all that bad. Reliance single-handedly ensuring and providing that cushion to the index, 1.25% higher for Reliance as we speak. But Nikunj as well joins in. Nikunj, not all that bad a start given the weak handover that we had from the globe.
You know, if you start speaking in the language of Nifty, Reliance is making the Nifty look so different that Nifty in a sense is just giving you a very different picture of what is happening in the world. And I think that holds true even for global indices like Nasdaq and S&P. The FANG stocks are making it look so different that nobody is able to really comprehend that what the real market is. The real market is not only Reliance, the real market is what is also happening in rest of the other sectors, and that's where I think some chop and churn I think is clearly visible. Samir Arora is ready. Let's connect with him. Samir, good morning. Great to have you back on ET now. Samir, you know, for those who are in the market right now, it's a great market. It's like a carnival, you know, every day stock prices are going higher. But for those who in a sense had a bearish view, they were concerned about the economy, they were concerned about the concerned about the earnings, and for those who have not participated, this is a very miserable time because each day stock prices are going higher and you have not participated.
Actually, that is not true because that depends on what is your starting point. So if you had been miserable about the economy for the last 1 year, it may have turned out all right actually. What if you turned miserable at the end of 17 after that big rally? So the point is it all depends because that's the whole business of investing, that it's a continuous game. And if you benchmark yourself and say, oh, on 23rd March, I should have bought, well, then sorry, that is not going to happen. Because even if you had bought that day, if you had 100 rupees and you were generally miserable and you turned only that day, you would have put 5, 10, 3% of your money in one trade and felt happy. So the idea, what I'm saying is, don't look at it like that. Don't benchmark of the best possible day to buy or the day on which you had no guts and then regret for the rest of the rally. The point is to say in general that what are your investment choices and how much risk you can take, and mostly the markets being forward looking and positive generally work out in the long term and even in the medium term, and these days even in the short term.